Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we dive into the world of cryptocurrency and explore its impact on our economy and society. Today, we're going to talk about an innovative proposal from Van Eck that could help address the U.S. government's looming debt crisis. Imagine a new financial instrument called BitBonds, which combines traditional U.S. Treasury bonds with Bitcoin exposure. This means that investors would be putting their money into both safe investments like U.S. Treasuries and the volatile world of Bitcoin. The idea is to offer a potential solution to the nation's fiscal concerns by combining stability with the potential for higher returns. According to Matthew Sigel, head of digital assets research at Van Eck, BitBonds' investment structure allocates 90% of the funds to low-risk U.S. Treasury securities and 10% to Bitcoin. This way, investors would be protected from inflation and asset debasement, while also having the potential to earn higher returns if Bitcoin grows. But here's the catch: investors bear Bitcoin's downside, meaning they could lose money if the value of Bitcoin drops. On the other hand, even if a complete collapse of Bitcoin's value occurs, the government would still benefit from cost savings compared to traditional bond issuance. The Treasury, on the other hand, would face high interest rates and significant debt refinancing needs. But with BitBonds, the government could potentially save billions of dollars by issuing these new bonds at a lower interest rate than traditional treasuries. Now, you might be thinking, is this proposal too good to be true? Well, the numbers suggest otherwise. According to Van Eck's analysis, if Bitcoin achieves a compound annual growth rate of 36.6%, it could potentially defease up to $50.8 trillion of federal debt by 2045. This idea has been endorsed by both the Bitcoin Policy Institute and Senator Cynthia Lummis, who argues that a U.S. strategic Bitcoin reserve could halve the national debt. And Van Eck's analysis suggests that such a reserve could help reduce $21 trillion of debt by 2049. So what does this mean for investors? Well, they could potentially earn higher returns than traditional treasuries, while also having the potential to grow their wealth if Bitcoin continues to rise. Of course, there are risks involved, like investing in a volatile asset like Bitcoin. But overall, BitBonds represent an innovative solution to a critical problem facing our nation's economy. It's a bold idea that could potentially change the way we think about finance and debt. And at Bitcoin Bulletin, we're excited to be exploring this story in more depth. We'll continue to follow this proposal and bring you updates as more information becomes available. In the meantime, if you have any questions or comments about BitBonds, be sure to join our conversation on Telegram. Thanks for watching, and we'll catch you in the next video from Bitcoin Bulletin.